everyone, and I welcome you today on our streaming session, regular live session with Exness. Hopefully you can see the video and hear the sound. I'm Stan. I will be a host today. I'm a trader. I'm a senior trading specialist at Exness. Give me just one sec, please. We'll close the window. All right, so I think we are good to go. Let me just say a few words about our live sessions. What are they all about? What they are not about? So we will, of course, be talking about trading, about preparation for the trading day, preparation for the week, essentially, because now it's Tuesday. So Monday, we already have seen some price action on Monday, so we can get the idea of what narratives and what current trends are dominating in the market right now. So Tuesday morning is actually pretty good time to make market analysis, to prepare for the week, to prepare for the trading day. So yeah, we will do that today. So, professional trading and I would say consistently profitable trading, if you will, requires not just, probably not just watching charts. However, there are purely technical traders, and I respect that. But I think you need to validate your ideas and hypotheses from either volumes or fundamentals or something else. However, the trading, at the end of the day, trading is just a numbers game. So that depends on how much profit you're gonna take from the market, how much loss you're gonna cut. So that's basically nothing more than that. And well, if you're just trading with charts, if that works for you, just charts, nothing else, well, that's absolutely fine. But when you are, developing in trading, when you have some evolution, so you are doing your best to minimize risks, to maximize probability of success. That's why today we will not just watch charts, but also try to see the upcoming news, fundamentals, any context. We will see where the capital is flowing right now, because if you know that, so you will have much more confidence in your trading decisions. All right, so we will also have chat. So I remind you guys that we have YouTube chat here. I know this session is also broadcasted to Twitch. I'm not sure if I can see comments on Twitch, but I definitely see them on YouTube. So if you want to communicate, if you want to leave any inquiry, you can absolutely log into YouTube. But give me just a sec. I also can log into Twitch too. So yeah, I don't think that's a problem either. And I think it is. So I think it's working too. At least I think so. All right. Nevertheless, put your comments in the chat section here on YouTube. So, for example, the instrument which you are watching, tell us from city, what city are you from, what country. It would be nice to know you better. Nice to know what you guys are trading, what you're following, what strategies do you use, everything. So don't be shy, don't hesitate. So just chat box on YouTube. So you are welcome. You're more than welcome. All right, and without further ado, let's get started. So we will start with our market analysis and preparation. And all right, let's go. So I am now showing you the. Give me just a sec. All right, give me just a sec. I'll relog into my personal area of Exness. And we will get started right away in no time. All right, here we go. You see the personal area here. So I remind you that you can use the tools that we have here in personal area. So for example, economic calendar is number one, which is absolutely essential for preparation for the trading week. Other than that, by the way, you can watch the news here in the instrument which you monitor. For example, you take, gold, for example, you trade gold, you click it here on the show on chart, and you can enable here economic calendar feature. So by doing so, you automatically know what economic news are going to be released for this instrument, for the gold specifically. So you guys know that this is a pretty familiar interface for most of you probably. That's a trading view. So that's a trading view feature. And those of you who are not new to trading view, so you already know that. For example, what do we have here? Factory orders for the United States, ADP employment change, which is not official, but that's not an NFP. And by the end of the week, we will have, I also have initial jobless claims. But at the end of the week, we should have non-farm payrolls. So let's see if it's visible or not here on the chart. Wait a minute. ISM services, initial jobless claims. I think, well, let's figure it out. So I think that NFP, I was thinking that NFP is going to be published this week, but let's check it out in the economic calendar. Let's go to Exness economic calendar, put here DXY. Sometimes NFP is published at the second week of the month, but I'm not really sure about that. Let's scroll it down really quickly. So today is April 1st. Today April 1st. I'm scrolling to Friday, April the 4th. Okay. Yes, here it is. We have non-farm payrolls being published on Friday. So that's the most important indicator for this week, guys. So for those of you who don't know, that's US employment, official employment, that's going to be published on Friday. So this report is being released by the Bureau of Labor Statistics of the United States. Let me show it really quickly. So that's the official website of this Bureau of Labor Statistics. Not only NFP is being published there, but also Consumer Price Index. So these are two major indicators that Federal Reserve monitors to make decisions about the interest rates. That's why inflation and employment are two most dominant indicators, two most important indicators. For example, if you scroll it down, that's official website. That's not any shady website, guys. That's absolutely official. You can check it out yourself. For example, payroll employment. Let's click on the chart and let's filter it out a little bit. So 2024, 2025. You've seen that the last number was not really that good, 151K. And I think it had missed expectations a little bit. Now we will know the number for March. And what is interesting, what is notable here, we need to know whether the number will be strong or weak, but above all that, we need to know whether the number will fit expectations or miss expectations. So I think the best way is to do that is tradingeconomics.com/calendar. That's another website. That's a third-party website, but it's kind of convenient because here we have publication of consensus forecast. All right, let's try to scroll it down really quickly. We use it for analysis all the time because it contains consensus forecasts. It has many charts. Well, it's pretty useful. All right. Non-farm payrolls. All right, so consensus forecast is 128K. The previous is 151. So in other words, on Friday, so markets will be preparing for this number, 128K. Should this number be missing expectations, so of course the American dollar will get under pressure, but it's already under pressure. So believe it or not, so let's try to understand the narrative or the sentiment for the American dollar. That's very important, guys, because that kind of shapes expectations about the entire market. All right, so to understand the situation with the American dollar, let's go to DXY, the American dollar index. So obviously that's not growing nor not it is falling, so it's consolidating, but we can definitely say that at least it doesn't have any bullish pressure. The US dollar doesn't have any bullish pressure. How do I know that? So not just about the price action, because price action itself might be deceiving. So it's just going flat for more than a week. How do I know in which direction American dollar is gonna go? Because it was moving down, now it's moving up a little bit for the second day. So American dollar basically gets stronger when we see tightening of the bond market conditions and when we see tightening of expectations about the interest rates. So in other words, if the market expects the interest rate to go higher in the future, or at least to not go lower with such a high pace, that means that expectations about the monetary policy are hawkish in this case. So tight conditions, high interest rate or interest rate not going down, meaning hawkish expectations. Do we have hawkish or dovish expectations? So on the chart, it's not really visible. It's not visible all the time. So to understand that, we need to monitor two things. Basically, the first is the dynamics of the bond market, particularly yields of long-term government bonds. In our case, it's 30-year Treasury bonds. So let me really quickly show you the picture from cnbc.com. So also that's an official website of American agency, which posts a lot of economic news. So we see this type of action. So yields of government bonds, long-term bonds for the United States, which are called Treasury bonds, they are positioning at 4.5%-ish, meaning that yeah, that's pretty dovish, I would say. So the market was sliding down from 4.7% to 4.5%. Whenever that happens, what happens with the bond price? How do you think? The bond price in this case moves where? It moves higher. The bond price moves higher, meaning that, for example, if you hold a portfolio of bonds, some of them are US bonds, some of them are European bonds, some of them are Japanese, Canadian, Australian, whatever it is. So the share of your American bonds increases in your portfolio. What are you going to do in this situation? Of course, you would sell some of them and rebalance your capital back to those bonds which yields are not growing and which prices are not growing, sorry. So you would allocate more capital to the bonds with greater yields in this case, in this particular situation. But I don't think that's a significant shift. I don't think it's a significant situation. That's just a flat noise, basically noisy action from 4.7% towards 4.4%. That's a noisy trading range. But at least we don't see any tightening for the American dollar. What would be tightening in this case? For example, imagine that yields would be growing and growing. So sell off on the bond market, yields are going up. What would happen in this case? Of course, American dollar would get the support as interest rate expectations will also be lifted. In our case particularly, so that's not gonna happen, that's not happening. So that's one thing, you already know that. Another thing is FedWatch tool. So for those of you guys who are not new on our live streams, so you already know these tools, and we will go through them consistently probably each live session, but I believe they're very useful because they help you understand the big picture. The big picture is really important. All right, so we have two interest rate decisions in June and July. So essentially, you see that probabilities are shifting down a little bit, meaning that market is discounting that at least interest rate won't go up probably at least in June, and traders await that at least it will be one step down, the quarter point decline in summer. And 42% of traders are believing that it will be another step decline. So in other words, so expectations are pretty dovish. The question is only what number of declines should there be? One step decline or two step decline? So that's the only question. That's not the question if the market will have one decline. All right, so the American dollar is not yet supported. So that's the narrative for this week. So if you build positions on Euro USD, GBP USD, anything else, so probably the sentiment will be playing on your side. I'm not saying that it will necessarily grow, but it will be playing on your side. All right, so let's get back to Exness terminal, and while we are opening the terminal, so let me read comments a little bit. Okay, price action is key. Watching from India, New Delhi. Hello, New Delhi. Hello, India. Watching from Uganda. So yeah, welcome here too. All right, where you guys from? So give us a comment in chat here in YouTube. All right, so while you are commenting here, we will continue with our analysis. All right. So let's start with understanding the basic narratives. All right, let's start, I think, with Euro USD. So I think that Euro USD might be a pretty interesting pair, because Euro had shown the substantial strength following the growing yields of German bonds. bonds are government bonds of Germany. The 30-year bonds, they have been declining, lifting price. Sorry, they have been yes, declining. So the price of them would be declining, and the yield were going up in this case. So let's start with that. So I will put here the 200-day moving average, the long-term reference, the long-term benchmark, which enables us to see the position of the price relative to the long-term trend. So that's important data point, at least when the price is coming closer to this area. All right, so what we've seen the price crossing this level, but not retracing back. So as you see, there's a little bit of a gap between the low, the previous week's low, that was the low from March 26th, and the current price section, which is April 1st. So that's slightly a gap. Also, let's build at least one fast moving average, which is 20-day moving average. So I know some guys don't like moving averages, but that's not the point of whether we like it or not. So they just do a good job visualizing the trend, and we can absolutely not use moving averages if we don't like. But that's the point. So currently euro is dominated by the trend which had started not so long ago. So first of all, there was a slight accumulation here, then the continuation that was substantial, and particularly this move was accompanied with high volume, with increasing in open interest, and that was purely a fundamental move driven by the long-term capital moving in. And yeah, so that was the point. So by the way, if we want to see what was happening with the derivatives market, with the commitment of traders reports, let's go to the futures, to the website barchart.com. We will scroll it down and select Euro FX, choose commitment of traders. So we will definitely see whether we had any capital flows. Well, we had. So you see this green line. The green line represents speculators. The big traders, the big speculators that have been accumulating the position massively throughout this move. And the number of contracts for futures open was developing through the minus 57,000 contracts to 64,000 contracts. So now speculators, large speculators, have a big position. On the other hand, we have the red line. The red line is a commercial traders position. So these guys are essentially the big operators which do not speculate in the market, so they purchase amounts of currency for the purpose of doing business. For example, commercial banks, and that's it. For if they operate on the commodity market, they might go for the physical delivery of crude oil, for example, or natural gas, whatever it is. So the observation is this: whenever this red line drops below to the new low, we are not there yet, by the way. But when it drops to the new low, so that might be the overbought market condition in this case. But it might, of course, stay for a long time there, like it was in 2022. So if you see what we refer to here, but the previous low was here, right, of 2020. It was minus 255,000 contracts. And we are very far from this low, and we are pretty far from even this low. So I think that the euro has capacity to move up because the accumulation process had just started yet. So it's not finished. It has just started yet. The only question is where exactly should we join the position? So the rally had started. The rally is fundamental pretty much, driven by the growing yields of government bonds of Germany, and driven by the capital flow from the United States to Europe. This narrative, make Europe great again, it helps euro to grow. So the only question is when we, or where we can join the position here. I believe that we can catch the swing here. The swing might be captured, but of course the better trade location would be slightly below the 200-day moving average. So I don't know if this area will lead to the continuation, but also that's kind of a support. But if we have the 200-day moving average tested here below the 200-day moving average exactly, so that would be, I think, the perfect spot for getting inside of this rally. But it might not happen, so let's be realistic. That might not happen because the rally is pretty strong. So when we have a strong rally, everybody wants to get on board of the move. So they are not waiting for big corrections of the market. So what might be the alternative here? So the price had corrected back to the below the 20-day moving average, so that basically the fast trend is still correctional, so it stands here. I think that if we might have, so that's a peak, right? That's another peak. If we'll have 3 consecutive closes below the peak, 1, 2, 3, 4, for example, the 4th day might be potentially the day when we can open the position. Now it's Tuesday, Wednesday, Thursday, Friday. That might be Friday, that might be NFP publication, by the way. So, and the good question is what to do now. So, and as Euro USD is consolidating inside of the support, I don't think it's a good opportunity necessarily for today specifically. So we will find something better, guys. But now it's just consolidating. It's just standing near the support. Maybe it will test 200-day moving average, maybe not. So let's see it later. If it tests, I think the situation will become much stronger. So just monitor for this level 107. If it tests and if it retraces, if it shows the opposite reaction, so I think that we might get on board of a pretty good swing, pretty nice swing, maybe rewriting the high at least. Remember, this money is fundamentally driven. That's not purely technical money. That's fundamentally driven money that runs by substantial changes in fundamental conditions, and that's why basically we refer to that as a strong trend. We want to follow the strong trend. All right, but until then, until Friday, I think we will monitor for continuation. So let me read some chat. So what's to say, guys, on this Friday NFP? Hello from Uganda, Kenya. Hello, Kenya, Uganda. Nice to see you here. Gold and Bitcoin. All right, gold and Bitcoin. Definitely, guys, we'll go through gold and Bitcoin too. So let's start with gold. Everybody wants to trade gold. The gold has shown the spectacular move to the upside. Really spectacular. So safe havens are the best plays for the first quarter. So now it's already the second quarter. So let's see whether the demand for safe havens will transition to the second quarter. But specifically, the first quarter of 2025 was notable due to capital flow into safe havens. Basically, gold, silver, Japanese yen, German stocks, and I think Chinese stocks too, so they were considered as a safe haven. So believe it or not, so that might be surprising. But now Hang Seng index and the DAX index are correcting from the peak. That's a substantial correction. They are no longer safe havens. So stock indices are not growing all over the world right now. So they are bottoming, so they are moving down. So sentiment is already over. So this rotation of capital is already over. But gold still remains I think the only vehicle that aggregates such a huge amount of money and that is growing. So I don't think there is another market like that. All right, so yeah, of course, there's a no-brainer that technically we're in a strong trend. That's a no-brainer, right? That's a swing. That's a swing which we are viewing right now in the market. But the main question, the good question, is whether the swing is already over or not. There are two ways to try. We can try to understand that using two ways. The first way is to just build a simple Bollinger Bands indicator here on the chart with a parameter of 20 and spot the moment when the price will come out of the Bollinger, crossing the upper line like it was happening, for example, some time ago, I don't know, in February 2025, in March. And that's a temporarily overbought situation. Of course, that's not a guarantee that market will stop necessarily. Sometimes it continues to move. Just it corrects, but not immediately. It continues to move. So that's not a turning point necessarily. That's not a short position point. But that's a point, a problematic point, I would say. So whenever the price reaches this level, so the probability, we're speaking of probabilities, not any certainties. So the probability of it consolidating, correcting, or stopping increases pretty dramatically. It increases pretty dramatically. So that's the one thing, all right? So we can also build some simple indicator like relative strength index, RSI, with a parameter of let it be 14, for example, but for the sake of aligning our indicators with the same parameter, so let's put 20 here. And speaking of that, so of course it's in overbought condition already too. So it was not the case for last week. So now it's in the overbought condition. So as well as Bollinger Band. So they are viewing the same situation. They are displaying the same situation. Now currently the price is still up. Usually whenever RSI shows weakness like that, or maybe divergence, that's a sign of weakness. Now we don't observe any divergence here, but if this peak will start, if the RSI will start moving down, for example, that might be the indication of the further reversal. The price will stand here, consolidate, and the RSI will move down. Currently we don't see that yet, so price had just entered the overbought area, but still keeps there. So I don't think that's a short yet, but it's already the bell, or already the signal that we should be aware of, guys, about the potential maybe pullback or any stopping of the rally. Of course, inside of the day you still may continue to ride the trend, but holding positions overnight, the overnight risk increases substantially. So while it was not so a week ago, but now it increases substantially. All right, so this is pretty clear. What happens from the supply and demand standpoint? So if we go to commitment of traders, we go to gold. What do we see here? So they are not fresh, so they are lagging for some time. I mean, this indicator is not updated daily. It's published every Friday, and it includes information gathered by Tuesday, the previous Tuesday. So at least it has, a weekly lag. But for understanding the big picture, I think it's pretty useful still. And well, what can we see here? We see that gold was also displaying the commercial traders accumulating pretty massive position here on the rally, on the way up. And that was a new peak here. That was not a huge peak, but still that was some local peak. At least we've seen that market participants, commercial traders, were accumulating long positions for gold at $3,000 for contract for 100 troy ounce. So that's a futures. I think 5 gold bars ish, something like that. But they were accumulating position. So if they would be dumping their position, so the situation would be the opposite. So in this case, it will be moving down. It will be positioning on the bottom. So we don't see that yet. It's not at the bottom. It's at the local peak. That displays the substantial demand for gold from commercial traders specifically. So they believe that gold is not expensive at all. Well, we don't know that yet, whether it will be or not, but that's kind of the situation. All right, so that's one thing. Another thing, so let's try to understand the average duration of a swing. So, for example, let's scroll it back to history. So history is usually the best source of information which we might have for this market, for any market. We have such tool which is called the price range, okay, or date range, sorry, date range. So we can measure the beginning of the swing, the end of the swing potential. Here is the end of the swing, 33 days, right? So that was 33 days swing. Another one was less than that. Just I want to figure out the average duration of a swing, for example, 11 days. Let's take any rally. So what is typical for gold? So let's do some kind of a research. 18 days, okay. Then again, we are applying date range feature here. For example, 19. Sorry about that. 19 days. Then another rally until the correction. How many days do we have? So let's explore it a little bit. 20 days, okay. So I think the maximum duration should be probably 30 days-ish, something like that. So again, the beginning, 16 days. and so on and so forth. So if you apply this tool to the rally, so you will see that, well, rallies for gold are becoming more extended in our case. For example, you've seen this one, it's 44 days, but I think that's an outlier because according to historical data, even on a strong trends, we didn't have something substantially more than 30 days, 35 days. 44 days is already anomaly. All right, what about current price action? So the rally had started here at February 28th. So let's figure out the date range, and we see 27 days. So I don't say that it's necessarily the end of the rally, but we are probably somewhere close to this point. So if you want to go long, be very sharp, be very quick, protect your positions quickly, because in this case particularly you might be operating at the end of the swing, at the final stage of a swing. So meaning that you have extended risks of liquidations, of distribution days here, and that might be the case. All right, but we are operating under support of a strong market participants. Capital flows into gold. Gold is being accumulated as the only asset, only legit asset, which is known as a protection. Everything else is moving down. S&P 500, Nasdaq, Hang Seng, DAX, Nikkei, everything is moving down. By the way, Russian market was a little bit of a safe haven at the end of the year, but it's no longer so. It's also moving down as there are negotiations between Trump and Russia, so they actually failed. Well, I don't say they failed, but they were not so fast as expected. Now Russian market is no longer the safe haven too. So, and I don't think it will ever be. All right. So speaking of gold, so what would be our course of action in this situation? So I think that course of action in this situation would be only day trade, of course, in the direction of the trend, because what we want to see here, we don't want to work here with tight stops, or we should be very sensitive to wicks. There is no guarantee that your market will give you the entry point. It doesn't grant you an entry point, but something like that, right? So whenever it goes up, so whenever the trend becomes mature, the appearance of such candlesticks with lower wicks like here is increasing. So that doesn't mean that the trend is stopping, but the sell-off, the liquidation to the downside, then the buyer stepping in. So that's a most typical situation in this condition. So don't, I would not. So you do whatever you want, but I would not place my positions very closely to the peak, because I think they would be vulnerable to potential market corrections. So instead I will wait for deeper corrections. So obviously market, for example, goes higher. That's not my point. I will not join here. I will not join the trend here, but I might wait for the correction, for the liquidation, and for the trading range to appear. Then market might retest this area and go higher. So that would be my point to join this rally. Something like that. It might be the Bollinger Band's lower band, which I might monitor in this case. Might be not. Oh, let's remove that, by the way. We don't need that specifically, but we might need the Bollinger Band. So something like that. So I don't know exactly, guys, what the shape of the price action is gonna be. We've been speaking about the possibility last week, possibility to join the rally for gold, but I don't think that entry point, the good decent entry point, was given to a trader here, because it was going up substantially very quickly. So the previous live session, our live session was at, let me just see when it was. So it was March 25th, right? March 25th. It was here, but remember that we were saying, so I was referring to this as a potential structural break. So the trend should have continued here. So if you can watch the previous recording of the previous session, so I was clearly pointing out this opportunity between the third and the fourth day. That's a point when you can enter the position and hold it, basically. Hold it overnight. Now it's already too late to hold overnight. But this was a potential buy and and between the third and the fourth day. So here it is, right? So that's exactly what happened there. Exactly. So the growth exactly went according to the scenario which we had built together. But now it's already the different situation. So everybody's seeing this trend already. So it's like the informational risk is already low. Market is at the peak. When the market is at the peak, so there is substantial pressure from both buyers who want to close their positions and sellers who want to also go short, and the buyers who want to go long. So market is coming to the point of tension, substantial tension. So that's why wicks and liquidations would be the possible scenario here. So wait until this. So I would wait for the deeper correction, for some wobbling at the bottom, and after that, so we need to be patient in this case, okay? Something like that. We need to be patient. I think that finally the market will show us the leg up, something like that. So let me put the screenshot, by the way. Maybe next time I will put our ideas to some folders, some different folder to go over those ideas on the next on the new session, okay? So that's what I think will be happening with gold. So it's still bullish. The short-term destination is bullish. The medium-term destination might be correction or consolidation. So that might be the scenario. So if you want to trade today, tomorrow, your destination probably would be long. But if you want to hold position for several days, 3-5 days, so it carries the substantial risk of liquidations and corrections. So be careful with that. Bitcoin, right? So we've seen the inquiry for Bitcoin. Bitcoin was, by the way, slightly more robust than expected. So because people have been expecting some turmoil for Bitcoin, and that was a good reason for that. So market is coming to the next quarter. Donald Trump becoming a president, a crypto president. So he actually brought some uncertainty to the market, but today's Bitcoin is growing. You see, it's recovering pretty nicely from the doji bar, which is the slightly bullish, but it's recovering. It might be the beginning of maybe some larger recovery. I don't know, maybe several days. And the essential nature of this market, that the market moves inside of a range, basically. So it goes down, it goes, so you know, volatility was pretty wide. Now it's getting more narrow. Bollinger Bands is adapting a little bit to the lower bars, to the smaller bars. However, there are no huge opportunities still, because there are no substantial capital flows on Bitcoin. We've witnessed that there is a balance, equilibrium between outflows and inflows for ETFs for Bitcoin. Previously, there was just unloading, so they've been pulling money out of ETFs. Now this process had stopped, and the situation has balanced. But that's no longer that's not yet the bullish situation. So there is no substantial, I would say, edge on the buying side. So short selling had stopped, but buyers probably are not yet in control here. But at the same time, so let's observe the situation at the same time. So that would be interesting to observe that. I don't think we have any long position just yet. The better opportunity would be slightly below, I think, maybe below the low, below some previous static low, the static support. Maybe something like, maybe for today, for this week, it might continue growing actually. After that, might be something like that. But I think the much better situation would be when the market will be diving deeper. But I don't have any idea, guys, about Bitcoin, to be honest, because when we don't have any substantial buying activity, nothing is going on actually, it's incredibly difficult to plan anything here. Incredibly difficult, because there is no buying activity just yet. So if you pull positions here, that will be completely random, and I don't want to put random positions here. And so our best action is to sit on the sidelines and try to analyze the market. Well, let's try to do that. So let's put first average true range indicator, the volatility indicator, which would show us the cycle, the potential cycle which Bitcoin is within. Cycle, what is cycle base? Cycle is the cycle of volatility, because volatility in our case, it shifts from low to high, from low to high. Whenever it's low, market starts to move. So market starts to initiate a trend. Whenever it's high, it starts to consolidate in many cases. So the previous dynamics, it worked like that. You see that ATR drops to the new low, so that's the beginning of the sell-off, or maybe it might be growth, we don't know. We don't know the destination, but that's the beginning of some extended rally. Again, market drops to the new low. That's not the specifically new low to be exact, but that's pretty close to the low, and market starts to make some swings here, and a swing to the upside. So that was the action of the market reaching the new low. That was the action. Now we also are close to the new low. We are not there yet, but pretty close, meaning that probably the market might be ready for some extended move. It might be ready. So we are not there yet, but it might be ready for some extended move. We don't know in which direction, so maybe it's long, it's short, we don't know that yet, but in case you see the market dropping to the new low, I mean ATR dropping, or volatility dropping to the new low, you might expect a larger move to start, to continue, to initiate. So I would wait maybe for a couple of days. If it's, if it consolidates and if it shows us maybe another bullish bar or something like that, so I think that might be pretty good opportunity. I will be definitely looking forward into capturing some bottom for Bitcoin. So I don't believe that it will move down necessarily, and I also don't believe that it will go today and tomorrow. I think this trading range needs to be extended a little bit, because it needs more time, I think, to reconsolidate, to build a wider formation, wider extension, and the volatility needs to go down a little bit in order to start the trend. Maybe it will be even wider. So be careful, guys, in day trading Bitcoin, because such a market is a mess. Because you see nothing is going on, it's standing, it's losing volatility essentially. Market is diving into the ooze, let's say, it's diving into the very slow water, choppy market, losing tempo, losing volatility. If you are day trading, well, you will not lose much probably in this situation, but you're not going to gain anything either. So that's, I would say, frustrating condition for the day trade and for the short-term trade, unless it forms a new low. That might be the indication that market is ready for the move back, and that might be your time to enter the position, but I don't think it's today. I don't think it's today. Maybe even, it will be ready after this consolidation. Maybe it will dive even lower. I don't know. Maybe it will dive even lower. I don't know the destination. Maybe it will go higher. Maybe it will go lower. We never know that. Probably the trend logic shows that it might be some lower move, but anyway, before that happens, probably we might see some consolidation. So you might also get on the downside move or upside move, depending on where the market will break. But my point is that we need to wait for a while until actually market settles, until volatility diminishes, and until market is ready for the bigger move. Let's also make the screenshot of this idea, or of this view. All right, so let's go to chart and read a little bit. All right, gold, Bitcoin. Why gold is higher? High Trump impact. We appreciate her effort. Thank you for joining too. Thank you very much. Tanzania is with us. So I will comment. Why gold is higher? Is it impact of Trump? Yes, it is. Markets don't like uncertainty in the first place. And there is a disruption in the financial instruments right now. So market is. So you see that we have an interesting situation, meaning that S&P 500 index is falling, but at the same time, the American dollar is also falling simultaneously. Okay, they are both moving down. That's not logical. Usually, if the market is doing well when American dollar diminishes and when interest rate expectations are lowering, when it's dovish, That means that money usually goes into the assets, into speculative assets, investment assets, such as S&P 500 index, Nasdaq index, technological stocks. If it doesn't, if they go down together, that either means the deflation scenario or stagflation scenario, which is a bad economic condition, expectation of a possible recession. We are not there, by the way, so employment numbers are strong, inflation is well, unemployment is also under control, so we are not, nothing is pointing to a potential recession, to a potential stagflation. So the only explanation is that money flows elsewhere from the American market. Money flows to European markets, to Asian markets. I don't think this situation will last long, for a very long time. But this situation with Donald Trump becoming the president, they scared the markets, so they are not market is trying to figure out what's happening, whether uncertainty with tariffs will influence it or not very much, so they are waiting for the tariffs to be imposed. I think tomorrow tariffs are starting to be working, but the money has been flowing off the American dollar under this pressure towards, as you see, European bonds, to euro, specifically to DAX. But now it's no longer the case, so money is also flowing off the DAX. You see that it's correcting, but DAX is substantially stronger in comparison to S&P 500. So if we say that, right? So because you see DAX, you see S&Ps. S&Ps is substantially more volatile, and it was moving down with a greater pace. Hang Seng, for example, Hang Seng index from Hong Kong, also pretty stable, but it was under correction. So it's not growing yet. It's in a predictable, short-term consolidation. So the money stays there, and the money flows out of the American assets. That's an interesting situation. We have never seen that for a long time. That's a disruption of political situation, disruption of trust, I would say, in financial markets. But let's observe this. The market is trying to figure out the destination, the direction. I think that the next possible interesting opportunity which really unfolds in the market is carry trade getting back again. What is carry trade? So as you know, probably guys, carry trade is type of operations when banks and financial institutions or hedge funds take loans in the yen, because the interest rate is 0.5%. It was lower before, but now it's still pretty low, 0.5%. The borrowing cost, however, might be higher. The swap rate, interbank swap rate might be higher, but still it's not that high. It's 0.7%, 0.8%, the swap rate for the interbank loan. And we've witnessed interesting situation, interesting anomaly, I would say, for the last couple of weeks. If we go to commitment of traders reports, click Japanese yen here, you see that we've witnessing the long-term low for commercial traders position for Japanese yen, which was not visible ever. Let's filter it to 20 years of data. So that's a data point which was not visible ever. Minus 147,000 contracts, meaning that these guys are building the massive short position on the yen. What is that? What does that mean specifically? So they believe probably that the borrowing volume will be substantially greater in the near future. So they try to sell their yens, which they have at a higher price, at potentially higher price, because if people or institutions or hedge funds or banks will start borrowing yen massively as it was before, the price of the yen will probably diminish in this case. So we'll have the uptrend for USD JPY, British pound versus JPY, and they are acting in advance. So they are selling. I think that might be probably the final price, finally good price. Might be that, might be something different. So let's see. Currently there are two influences which Japanese yen experiences. The first is a higher yields, pretty high yields. Everybody is expecting interest rate to go higher to 0.7% by the end of the year. And inflation is going up, but inflation might have peaked already. So let me show you one interesting picture. Go into Google, right? Japan inflation chart. So just as simple as that. Japan inflation chart, trading economics. And here it is. It was 3.7% for February, but let's see forecast. The forecast is this. So that's a consensus forecast. Market is thinking currently that the inflation in Japan probably have peaked already. What does that mean specifically? That means that the yield of bonds of Japan will go down. So it was at the peak, at the pretty high. It was pretty high, the new peak historically. It might go down. Inflation will go down. Interest rate might not go up at least. So market will stabilize. Interbank swap rates, loans, everything will stabilize, and carry trade operations will be back on track, meaning that the borrowing process for the yen will still be intensified. So with that, we might be in the interesting point for euro yen, and also I think not only euro yen, GBP, American dollar versus yen, something against the yen might be an interesting point. I believe that euro yen is probably might be the best play in the second quarter. Why is that? Because you see that despite its local weakness, it can't cross the 200-day moving average, right? But it's local. Despite its local weakness, it's standing right, by the way, right near the 200-day moving average. Despite its local weakness, it was pushed down slightly, and if the trading range breaks, you see it was a massive trading range for the long time. That was a trading range which had started to build in August 2024. Finally, market needs to exit of this trading range. Let's put average to range indicator here to anticipate this cycle which we are in. So it's on the local bottom. Volatility is on the local bottom, not at the quarterly bottom, but it's on the monthly bottom, I think. But still, it's not at the top, so it's losing volatility, which is potentially interesting situation, because the lower the volatility, the closer the moment of the bigger moves. And if carry trade operations will get back on track, so we might see something like that. Price might find some buying pressure to the upside, and we might be on the verge of really new trend for euro yen, something like that. It will break the range, and it might go with a big swing, very big swing. So if you get on this swing, so if you build a position with a decent stop loss, you might get the tremendous asymmetrical trading opportunity here. Just positioning yourself just in the direction of the trend, just as it was. I don't know, as it was here, for example, the same situation near the 200-day moving average. Yen was here, the yen was here. Market retested the 200-day moving average, started to move day by day, slowly accelerating day by day, but finally it had grown 1,000 pips, 1,000 points. This the fourth decimal, the fourth point under the decimal, after the decimal. So basically 1,000 pips, or 10,000 pips if we're speaking the five points calculation. That's pretty big move. Imagine that you enter with pretty tight stop, pretty early. Well, holding a position is an art, guys, so not all people can handle that. But imagine that you open a position somewhere here and you just hold it for a month. Stop loss of 50 pips, 1,000 pips move, 20 to 1, right? That's not a fantasy. That's happening from time to time on these assets. You don't need to trade in this situation. You just need to hold the position, and that's it. That's it, what you want to do here. So I would be monitoring for potential entry point here, maybe below the 200-day moving average. So if I see the white bar, the bullish bar, so I probably might be getting onto the trade and just holding it to the swing until the previous high, something like that. I think it will be absolutely possible. So that might unfold in the current market. So I think that's That might be, so that's not obvious situation because price action is pretty neutral, right? That's not obvious. But if we look at the fundamentals, if we go step ahead, one step ahead, that might be pretty interesting. So let's also put a screenshot again and let's compare it. And the last but not least is crude oil. Previously we've been talking about the price possibly reaching the 70 level. We've been monitoring this level and whether the price can surpass it or not. I said that if the breakout would be false, we might consider going short. But it was not false. It was actually the robust 150 pips move without any rejection. So the false move would have been here. It would have broken, then going down. So that would be the false move. It has not happened, so it's a robust, strong move above 70. That's why I'm no longer considering short here. I think we are technically in the swing, in the bullish swing. So I'm not opposing the bullish swing. At the same time, price had crossed the 200-day moving average here. So that's also the problematic point. So that would be very difficult for the price to grow above this level, I think, this week. Also, if we place a 20-day Bollinger here, you would see that the price is just higher than the 20-day Bollinger here, okay? That means that we are possibly at the verge of at least some correction for crude oil. Some couple of bars, couple of days down would be absolutely possible here under these circumstances. Well, I guess that's pretty it from my side for today, so let's read some comments. Natural gas, XNG USD. All right, so that's unusual inquiry because not so many people are trading natural gas. That's really difficult because it's choppy, it's not smooth at all. Natural gas is pretty choppy, and it makes sense to trade it only at some strategic pivot points. Let's go to Commitment of Traders report and try to figure out whether we have any strategic pivot point on natural gas or not. Let's go to energies, natural gas NG, which is stored in United States. So what do we see currently? The price was consolidating for the last week. The net position of commercial traders has been growing, but it's positioned right in the middle. The price itself is considered as a fair price. Because if we go to EIA.gov, which is the Energy Administration of the United States, go to Short-Term Energy Outlook Forecast, STO, click it here and see the projection for natural gas. Let's try to go here. Between 4 and 5, right? So the supply and demand thing is between 4 and 5. So I don't say that it's necessarily the fair price right now. So maybe it's under bullish pressure a little bit. But you see that seasonally, from the seasonal standpoint, so it still might be projected as a consolidation around 4. And that's a seasonal factor because natural gas is a lot of influences on energy assets, including natural gas, are seasonal. So I don't think we should necessarily build a long position here because that's the area of potential equilibrium. It's also below the previous peak, above the previous peak, sorry. So I think that we don't have any edge here. So if you still want to trade this asset, technically, so the best course of action would be maybe to wait until it plummets below the 20-day Bollinger, below the previous static support, maybe gets back, something like that. So if you still want to trade it, probably your course of action might look like that. So you might stick to those areas, something like that. Of course, here it's supposed to go long, here it's supposed to go short, but until then, when it just stands in a consolidation, so I think that doesn't make any sense. Oops. Alright guys, so yeah, thank you for joining the today's session. So let me read some comments really quickly. GBP, USD and Euro yen. Euro yen we already observed, so please watch the recording. We've dedicated some time to Euro yen. And that, by the way, might be a really big opportunity for Euro yen, so just pay attention to that. Just watch the recording, might be interesting. Alright guys, so I think that GBP USD we haven't seen this time, but we are limited in 1 hour live stream, and that's not possible, unfortunately, to go through all of the instruments. Well, we can do that, but it pays off to spend a little bit more time explaining and understanding the logic of really good opportunities. Next time we will watch stock indices, anything. So I'm focusing specifically on opportunities which I'm uncovering this week. While there are a lot of them, a lot of financial instruments, but I'm specifically telling you about something interesting that I have found for this week specifically, or maybe 2 upcoming weeks. But anyway, there are a lot of opportunities which you can trade in Exness. There are 5 or 6 asset classes available, including stocks, stock indices, commodities, energy commodities specifically, right? Gold, silver, a lot of currency pairs. So you may choose from markets which you better understand, which better appeal to you. So there are a lot of markets, and I believe that's good, especially for swing traders, because in order to have many opportunities, for example, if one market trends, other market may consolidate, then they flip around, and thus you are not linked to just one trading instrument. If you had only currency pairs, sometimes they correlate, they don't move much, but some move might uncover on cryptos, or some move might uncover on crude oil or anywhere else. Alright, so with that I'm saying goodbye. Thank you for joining, thank you for participating and commenting here. Drop this link for the recording to your friends and fellow traders. We would appreciate that. Put us a like here on YouTube to enable YouTube algorithm to promote this video and put it in a recommended feed. So yeah, that was Stan, the senior trading specialist from Exness. So see you later next week on Tuesday, the same time, and we will watch how our opportunities were uncovering in the week. With that, goodbye and have a good week ahead.